Very good morning, dear students. Till yesterday, we were discussing about the basic concepts of business taxation, the format of the taxation to calculate total taxable income, what are all the 5 heads of income is there. So we have considered only the 4 heads of income for the purpose of corporate tax or the business taxation. And in order to calculate the total taxable income, we have to take the total of 4 heads of income. That is, one is taxable income from house property, and write it in the board. Taxable income from house property. Next, taxable income from business or profession, or we can say tax profit or gains from business or profession. Business or profession. Next, taxable capital gain. Then taxable income from other sources. So put together, the total of these 4 heads of income is called as gross total income. For this gross total income, we have to give a deductions and the chapter 6A from the section 80IA to 80U. 80IA to 80U. After giving deduction, the balance what we get is called as total taxable income. Correct. So these are definitely I will work out problems. To know the problems, students, you must have an idea of provision. Without understanding the provision or the format, you cannot work out the problem. So just clearly understand the format for the calculation of taxable income from house property, business or profession, capital gain, and the other sources. Now, yesterday we have completed with taxable income from house property, the format for calculation of taxable income from house property, and the format for the computation of taxable capital gain, and also other sources. Right? So now, today let us discuss about the format for the computation of taxable income from business or profession, along with some illustration. Let us discuss today about the computation of taxable income from business Okay. Look at here. There is 2 portion. One is business and the other one is a profession. Correct. Profession in the sense it can be any kind of profession like lawyer, doctor, teaching profession, etc. So whatever the income earned by the professionalist must also have to be taxed. So for that we take for the calculation of taxable income from profession. For taxable income from profession, the format like professional income, professional income minus professional income minus professional expenditure. Professional expenditure means whatever for the business they don't prepare profit and loss account, instead they prepare income and expenditure account. So the business, the professionalist always prepare income and expenditure account. So whatever the professional income as per the income and expenditure account, that must be taken here. And without any professional expenditure which is shown in the income and expenditure account, then whatever the balance we get, that balance is called as taxable income from profession. Taxable income from profession. So this is the format for computation of taxable income from profession. Next thing is one. Okay, this is about taxable income from profession. Now let us discuss the very important aspect of taxable income, that is taxable income from business. Taxable income from business. Okay, for computation of the very important aspect is income from taxable income from business. So here, for calculation of taxable income from business, we have to take into consideration of profit and loss account or the statement of profit or loss. Statement of profit or loss. So for the format of this is, as usual, we have to take the assessee, that is the name of the assessee, residential status of the assessee, and the right side, the assessment year and the previous year must have to be mentioned. What is the assessment year? Assessment year is 2023-24 and the previous year is 2022-23. So always you should remember this. What you have to remember? What is your assessment year and what is the previous year in which you are going to do consider the provision for studying this business taxation in the second semester of 2022-23. Understand? So you are going to consider previous year as 22-23 and 23-24 as a assessment year. Next, the first part is we have to take whatever the net profit is available, that net profit. Where do we get net profit? This net profit we have to take as per the statement of profit and loss or as per profit and loss account. As per profit and loss account. This is a net profit. For this net profit, we need to deduct. What we have to deduct? Here, three items we have to deduct. The first item should be deducted here is admissible income. Admissible income not debited. Admissible income not debited to profit and loss account. The first very important, listen carefully. This is admissible not income, I'm very sorry. Admissible expenditure, admissible expenses, admissible expenses not deducted. See, admissible means what? Allowable. Whatever the expenditure which is allowable as per the income tax, if it is not deducted, that must be deducted. Deduct admissible expenses not debited to profit and loss account. Or do one thing, instead of taking the deducted amount, first let us add, then deduct. Okay. Just I'll repeat. Net profit as per profit and loss account. After the net profit as per profit and loss account, we need to add something and deduct something. Let us first add. Okay. What we have to add? Whatever the inadmissible expenses. Inadmissible expenses debited. Inadmissible expenses debited to profit and loss account. Inadmissible expenses means what? The expenses which are not allowable. Inadmissible, it is not allowable. The expenses which are not allowable as per income tax provision, then that must be added. What we have to do? It must be added. Why we have to add? Look at here. In the profit and loss account, the net profit was showing 1 lakh rupees. What was the net profit? Net profit was 1 lakh rupees. Here, the expenses, suppose take an example of any provisions. There are so many inadmissible expenses. You can look into the third block of the study material where it is mentioned. In the third block of the study material, it is considered what are all the admissible expenditure and what are all the inadmissible expenditure is listed. So many admissible and inadmissible expenses are listed. You can go through that. Here, net profit is 1 lakh rupees and provisions. Any provisions, like can be income tax provision or the provision for bad debt or the provision for depreciation, any reserves. So all those are any amount of income tax paid, etc. It is not actually the expenditure of the company. It is not the actual operational activity of the business to keep on paying the tax, keep on creating the provision. It is just a set aside amount. So that is inadmissible as per income tax. So suppose provision of 5,000 rupees has been created and debited to the profit and loss account. Debited to the profit and loss account means what? This amount of 5,000 rupees is deducted from the gross profit. Understood? When it is deducted from the gross profit, the balance of 95,000, this is the gross profit. From this gross profit, the provision of 5,000 is created. Balance is how much? 95,000. 95,000 is what? Net profit. So just for decreasing the profit and to show the reduced profit for the purpose of income tax, to show the reduced profit for the purpose of income tax, in order to reduce the profit to pay less tax to the government, they create all these provisions. But creating provisions and payment of income tax, everything, it is not allowed as an expenditure. They have to compulsorily make the payment of income tax, correct? It is not allowed as per income tax as a business expenditure. So here this 5,000 rupees is deducted. 5,000 rupees is deducted and shown in the profit and loss account. But what actually the profit for the company for the payment of tax? Which profit should be taken? When this 5,000 is not allowed as per the Income Tax Act, then the company must have to pay tax on 1 lakh rupees, correct? Not on the 95,000. So what we are doing now, the 5,000 rupees what already deducted, 5,000 rupees what already deducted, the same provision is going to be added as an inadmissible expenses, and this actual profit for the purpose of calculating taxable income is now 1 lakh rupees. Understood? For this purpose, we are going to add inadmissible expenses. You should understand this carefully so that you can able to do the problem. Next, second point. First one is what? Inadmissible expenses which are debited to profit and loss account. Debited means what? Already deducted from the profit. So we need to add it back. Very good. Next, second thing is whatever the business income, if any business income not credited to profit and loss account, that must be added. Any business income which are not credited to the profit and loss account, that must be added back to the net profit. Why it should be added back? Because it is a business income. In order to make the payment, less payment of tax, they have not shown this as a income and is not added to the net profit. Now, to make the payment of tax correctly on the exact taxable profit, this business income, whatever the business income which is excluded from the net profit, must be added back. And the third important thing which we have to add is overvaluation of opening stock, overvaluation of opening stock, and undervaluation of closing stock. Overvaluation of opening stock and undervaluation of closing stock. So look at here, this overvaluation of opening stock. If what happened if it is overvalued, why it should be added back? And also undervaluation of closing stock. What happened if there is a undervaluation of closing stock and why it should be added back? It may be a question for you. But when there is an overvaluation of opening stock, it leads to decreasing in profit. Overvaluation of opening stock leads to decreasing in profit. Where do we show this opening stock and the closing stock? It is in the trading account. Correct? I am opening trading account now. In this trading account, the opening stock, first thing what we account here is opening stock. So, to opening stock. To opening stock. Look at here, opening stock here is 5,000. There is a purchase of 10,000 rupees and there is a sales of 20,000 rupees and by closing stock of 5,000 rupees. 8,000 rupees of closing stock. Let us take that. What is the total? Total is 28,000. Total is 28,000. From this 28,000, if you deduct 15,000, what we get? We get 13,000. What is this 13,000? This is gross profit carried down. Correct? You know this format, right? Now, what I am going to do here, overvaluation of opening stock. Overvaluation means what? In place of 5,000, it is been overvalued to 7,000. changes or decreasing in the gross profit. Okay, look at here. It was 5,000. Now I am taking this opening stock as 7,000. I think it is visible to you. Yes, this 7,000, opening stock of 7,000. Opening stock of 7,000. This 7,000 rupees of opening stock, if it is considered in place of 5,000 rupees, what happened now? Just check it. There is all other things remains constant. When all other things are remains constant and there is only changes in the opening stock, then this opening stock, I'm sorry, the gross profit amount, what happened to the gross profit? Total buy sales is 20,000 and the closing stock is 8,000, total is 28,000. Out of this 28,000, we are going to deduct 7,000 rupees plus 10,000 of 17,000 opening stock plus purchases. What will be the gross profit now? Can anyone tell me what is the gross profit? Gross profit, how much it is? Yes? Okay. 28,000 minus 17,000, it is 11,000, is it? What was the earlier profit? Earlier it was 13,000. The gross profit was 13,000. But now it is decreased to 11,000. 2,000 rupees of increasing in opening stock leads to 2,000 rupees of decreasing in the profit. So, overvaluation of opening stock is going to decrease the profit, hence we need to add it back. Understood the concept? Next is we have to check whether the undervaluation of closing stock is affecting anything. So there is a closing stock, the closing stock of 8,000 rupees. Once again, Very sorry, dear students. It's audible now, right? Okay. Now, let us, after adding these three for the net profit, next we have to deduct. What we have to deduct? I'll continue further here. What we have to deduct? We have to deduct first one for the same. We have to deduct the first item. What we have added there? We have added inadmissible expenses debited to profit and loss account. Correct? Opposite to that. That is admissible expenses. Admissible expenses. Admissible expenses debited to profit and loss account. Admissible expenses debited to profit and loss account must be deducted. And repeat again, admissible expenses debited to profit and loss account must be deducted. Next. Admissible expenses debited to profit and loss account must be debited here. Next is non-business income credited to profit and loss account. Non-business income credited to profit and loss account. Whatever the non-business income which is there and is credited to profit and loss account must be deducted. And third one is, I'll explain you all the three again. Third one is undervaluation of opening stock. Undervaluation of opening stock and overvaluation of closing stock. Undervaluation of opening stock. Undervaluation of opening stock and overvaluation of closing stock must be deducted. So why all these three must have to be deducted? If you deduct these three, the balance, again, whatever the total you got from this, you deduct this amount. And if you deduct this amount, I think it is visible. The balance, what you get is called as taxable income from profession. Taxable income from businesses. Taxable income from business. I'll repeat these three. Just listen carefully. Admissible expenses debited to profit and loss account. Admissible expenses means what? Admissible expenses, it is not debited. Whatever the allowable expenses which are not debited to the profit and loss account. Not debited means what? Which are not deducted. Profit was, suppose the profit was 50,000, where there is a allowable expenditure like any other kind of expenditure, salary or something, or allowable depreciation which are not deducted, worth of 10,000 is not deducted. If the allowable expense is not deducted, what happens? It shows more profit. If this amount is not deducted, means the tax must have to be paid on this 50,000. Unnecessarily, the company must have to pay more taxes to the government. This is actually a burden for the company, right? So, in order to calculate tax or assess the tax on the exact value of profit, then this expenditure which are allowable as per the Income Tax Act must be. Is it not clear? Is not audible? Somebody saying is not clear? The amount whatever allowable expenditure is not deducted must be deducted to know the exact profit. That is admissible expenditure. Yes, it is audible, right? Okay. Admissible expenses not debited to profit and loss account must be deducted. And next, it must be deducted. Next, second point is non-business income credited to profit and loss account. So business income means whatever the income which are closely relating to or with respect to the business must be added. But any any non-business income, suppose any income from house property or any profit on sale of capital assets or any casual income like winning from lottery, etc. That is not a business income. That comes under respective heads like income from house property, capital gain head, and also income from other sources head. If those incomes are credited to this, since it is not a business income, whatever the non-business income which are credited must be deducted to know the exact profit. And the same way here, the very important, undervaluation of opening stock and overvaluation of closing stock. Undervaluation of opening stock. What happens? If there is an overvaluation of opening stock leads to decreasing in profit. Overvaluation of opening stock leads to decreasing in profit. Undervaluation of opening stock leads to what? Increasing in the profit. So, this undervaluation of opening stock increases the profit. So, in order to have an exact profit, to know the appropriate profit, to ascertain the appropriate profit, we need to deduct when there is an undervaluation of opening stock. Similarly, overvaluation of closing stock must also have to be deducted. Overvaluation of opening stock, overvaluation of closing stock. See, look at here, undervaluation of closing stock leads to decrease in profit means overvaluation of closing stock leads to increasing in the profit. So there is increasing in profit, this leads to increasing in profit. So in order to reduce the profit or to know the exact profit, we have to deduct this and on overvaluation of closing stock. Understood? Understood the format? Now let us work out one problem based on this. Just share the problem to you. Can you able to wave this problem? Okay. Look at this problem. Here, they have given the information relating to the computation of total income. So first, let us work out the taxable income from business. I'll read the problem now. From the following profit and loss account, measures Sridha Limited compute his total income for the assessment year 2023-24, which is the assessment year. Assessment year is 23-24. Then they have given salary to staff of, is it not visible? Is this problem not visible? Kindly reply fast. Yes, it is visible, right? Okay. Now, look at here. They have given profit and loss account. Profit and loss account which includes salary to staff of 30,000, salary to proprietor 6,000, rent and taxes 2,000, printing and stationery it is 500, trading expenses, trade expenses it is 1,300, sales tax 1,200, bad debt reserve it is 2,400, bad debts written off 1,000, 2,400, 2,400 bad debts reserve it is 2,400, 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 bad debts written off Bad debts, one. Bad debts written off, it is 600. Then telephone expenses, printing and stationery, 1 second. I'll just zoom it. Okay. Printing and stationery, it is 500. Trade expenses 1300. Sales tax 1200. Bad debt reserve 2400. Bad debts written off 600. Telephone expenses, it is 300. Interest on capital 3000. Okay, donations 200. I'm sorry. Telephone expenses 300. Interest on capital 3000. Interest on loan 700. Donations 200. Repairs to furniture 350. Legal expenses 1250. Puja expenses, it is 500. Then further, they have given depreciation of 3,900, net profit of 25,000. Before to that, they have given right side of gross profit 72,000, interest on government securities 4,150, capital gains short term 2,500, bad debts recovered which was allowed previously 300, sundry receipt 250. I'm just reading this problem, but we have to analyze first. So before working out for the taxable income, we should have to identify what are all the admissible expenses, what are all the inadmissible expenses, what are business income, non-business income, is there any overvaluation of opening stock and undervaluation of closing stock. Like this, we have to look into the individual item, for which you must have an idea of what are all the admissible expenses and inadmissible expenses. So once you go through the admissible expenses and inadmissible expenses, which is available in the study material, or you can look into any textbooks for it, you will be having, you will get to know about the admissible and inadmissible expenses. Now I'll just tell you what are all the admissible expenses in this problem. So in the profit and loss account, while looking into the profit and loss account, what we should have to identify, in case if it is a debit side of the profit and loss account, means what are all the expenditure which is debited, we should have to list it. Expenditure debited, whether it is admissible or inadmissible, that we should have to be checked. So first one is salary to staff. Salary to staff is an admissible expenses. You can just take a screenshot of the problem and you can work out. I'll just show it this in one page. If I am showing it in one page, it is format is okay. Now it is correct. Look at here. First one is salary to staff. Since the salary to the staff is admissible expenses and it is operational activity, labor charges are the employee's salary is an allowable expenses, it should be deducted. So it has been deducted, nothing to do with this. We will ignore this. Admissible expenses, just ignore. Second one is salary to proprietor. Who is a proprietor here? Proprietor may be Mr. Sridha or somebody. So where the proprietor, he himself is taking the salary. Is it allowable expenses? Definitely not. It is a notional expenses. So for Mr. Sridhar, he is running business. He will be getting the profit for from his business. So whatever the salary which has been taken by Sridhar, it is just for only to show that reduced profit to pay less taxes. So here, in order to reduce the profit, they have shown this salary to the proprietor, but it is an inadmissible expenses. We have to deduct it. Salary to the proprietor, we have to deduct. Next, as it is an inadmissible expenditure. Next is rent and taxes. As usual, rent and taxes is an admissible expenses. Ignore. Printing and stationery is also business expenses. You can ignore. You should have to identify only the inadmissible expenses from the debit side. Okay, just mark what are all the inadmissible expenses, then we can take that in the problem. When doing the problem. Next, trade expenses is as it is business expenses, it is allowed. Sales tax. See here, income tax is not allowed. Payment of advance tax is not allowed. But the sales tax is allowed because the tax is paid because there is a sale. Correct. So this sales tax or the GST, whatever they pay, that is allowed. Goods and services tax is allowed. Next, bad debts reserve. Reserve. Any amount of provisions or the reserve fund which is created is not allowed. So this bad debts reserve is an inadmissible expenses. It must be, whatever it is debited, deducted, must be added back. Inadmissible expenses. Look at the board. Inadmissible expenses. Where is inadmissible expenses? Yes. Inadmissible expenses has been deducted. We need to add it back. Okay. Next, telephone expenses. Of course, it is a business expenditure. We can deduct it. Next, interest on capital. So the capital is invested by the proprietor for which he is taking the interest is also not allowed. Interest on capital is not allowed. Next, interest on loan. For any amount of loan for running the business, if it is taken, it can be allowed. But interest on capital is not allowed. Next, donations. Again, donation is not allowed. But for this, the deduction will be given under section 80G. Whatever the deduction we give from 80IA to 80U, there we give deduction for this donation. But here it is not allowed since it is an inadmissible expenses and giving donation is not the business operational activity. Correct? So we need to consider this as an inadmissible expenses and add it back to the business profit, net profit. Next, repairs to furniture. Whatever any capital expenditure which you incur on the capital asset. Capital expenditure, listen, capital expenditure. There are two different types of expenditure we can say, and it is there in your study material. I think it's first or in this first unit, first block, first unit. There is a information relating to the capital and the revenue receipts, capital receipts, capital expenditure, revenue expenditure. There, if you look into that, you will get to know an idea about what are all the capital expenditure and what are all the revenue expenditure. So whatever the capital expenditure incurred on the capital asset, that is inadmissible. Capital expenditures are inadmissible because this is one-time expenditure where they are not going to consider this as a for furniture business. It will be operational activity, so they can consider there. But for this trading business, repair to furniture is not running activity, operational activity. Hence, it is inadmissible expenses. Next, legal expenses. Of course, legal expenses, if it is incurred for the business activity, then it can be considered. Next, puja expenses, of course, it is for the business, it can be considered. Next, depreciation of 3,900. So, let us look into the additional information, whatever is given. If this depreciation is allowed as per the Income Tax Act, then we can consider this as admissible expenses. If not, we have to make an adjustment. So, this is about the debit side part of the this is the total part of the debit side one. And the credit side, we have gross profit. Of course, it is a profit. Next thing is interest on government security. So here, any interest on government securities comes under the income from other sources. This income from other sources or the interest on government securities are taxable under income from other sources. Hence, it is considered as non-business income here. What we have to do for the non-business income? Whatever the non-business income is credited to profit and loss account. Credited means the profit is going to increase. So, we have to deduct it. Correct. Next thing is capital gain, that is short-term capital gain. Whatever the income which we are earning from the sale of capital assets, short-term capital asset, that will be taxable under the head capital gain, not under the head business. Hence, it is a non-business income. So, we have to deduct it. Next, bad debts recovered, previously allowed. So, whatever the bad debts recovered, which was allowed previously. So, in case if the bad debts recovered any amount of it, earlier it was credited as a bad debts written off, and now this amount of bad debt is recovered, that can be considered because earlier we were deducted. Now we have to add it back. So this bad debts recovered, if it is allowed previously, then we can consider that as a business income. See, look at left side, we have bad debt reserve and bad debt written off. Bad debt written off we are allowing as an admissible expenses because we know it is exactly the bad debt amount is not able to recover it. It is unrecoverable. So hence we are writing it off. So when there is a writing off of bad debts, then we can consider. But when there is a reserve or the provision for bad debts, that is not allowed as per income tax. Next is sundry receipts. Sundry receipts can be any business receipts. Since they are not mentioned, it can be taken as a business income. Okay, we can consider this as a business income. So we can take, we can consider the additional information, that is trade expenses. Trade expenses include rupees 300 being penalty paid to customs authorities. So whatever the trade expenses, amount of 300 rupees, it is being penalty paid to the custom authorities. So since it is a penalty, any fines and penalties are not allowed. Where is the trade expenses? Look at here, it is I think fifth point. Yes, fifth point, 1,300 rupees, there is a trade expenses, and this trade expenses includes 300 rupees of penalty paid to custom authorities. So for custom authorities, they have paid this penalty, but if it is any payment of custom duty, that is allowed, but payment of fines and penalty is not allowed. So it is an inadmissible expenses. So under trade expenses amount of 1,300, we have to add back 300 rupees, which is already deducted from the profit. Next, stationery. Stationery includes rupees 100 being cost of college books of Mr. Sridhar's son. So look at here, Sridhar is a proprietor where he is used rupees 100 under the stationery for the books of his son, for the college books of his son. So this 100 rupees, whatever he has been taken or incurred expenditure under printing and stationery worth of 500, this 100 rupees must be added back as a inadmissible expenses which are deducted. Next, legal expenses are incurred for purchase of land. Land is a capital asset or it can be called as a fixed asset. So when this land that is capital asset or the fixed asset, this amount of any expenditure, what I said, any expenditure incurred on the capital asset is called as capital expenditure. So this capital expenditure for incurred for purchase of land, whatever the legal expenses incurred for purchase of land being a capital expenditure, we made this as an inadmissible. It is not allowable. Since it is not allowed, then what we have to do, we have to add it back. And lastly, depreciation allowable as per rule is 3000, but how much the amount is debited here? The amount debited is 3900, and the actual depreciation allowable is 3000. Excess of 900 rupees is debited, so we have to add it back. Understood? So now let us do this problem. We can do one thing for this depreciation. So whatever it is debited to the profit and loss account can be added back. The entire amount of 3900 we can add it back. In any problem, for depreciation, you must remember whatever the amount of depreciation which is already been deducted, and if it is not as per the income tax rules, then add the entire amount, and later you adjust, you allow the depreciation amount which is allowable as per Income Tax Act. Okay, let us work out this problem. Okay. First one, assessee. Assessee is measures Sridha Limited and residential status. What is the residential status? Residential status, we have to check whether the company is a resident or not. So this, since no information is given, so we assume that it is a resident. Then assessment year, it is 2023-24, and previous year it is 2022-23. And just remove, you can take the screenshot of it. See, just take the screenshot of the problem. I'm going to remove this slide so that you can view the board. Take the screenshot. Shall I remove this? Shall I remove the screen of problem? Take the screenshot and keep it with you. Shall I do it? Okay. Look at the board now. So here, first we have to take the net profit as per profit and loss account. What is the net profit as per profit and loss account? Net profit as per profit and loss account is 25,000. For this, we need to add. What we need to add? We need to add, first one is inadmissible expenses debited to profit and loss account. So I have been analyzed and said you whatever the inadmissible expenses it is there in the debit side, which is debited. Let's look into the debit side of the profit and loss account. So first profit and loss account item is salary to staff. It is 30,000. It is allowable expenses. Next, salary to proprietor. Salary to proprietor, it is inadmissible. Salary to proprietor, amount of 6,000. Next, rent and taxes, 2,000 rupees of amount. So rent and taxes 2,000, it is allowable. Next, printing and stationery is 500. For any item, there is an additional information of the adjustment. You should have to look into that adjustment. So look at this adjustment here. There is a stationery. The second point of adjustment, they say stationery includes 100 being cost of college books of Mr. Sridhar sir. So 100 rupees of printing and stationery is not allowed. So printing and stationery 100 rupees. Next, third point. Look into the debit side of the account. Trade expenses. Trade expenses is 1,300. First adjustment is given relating to the trade expenses. That is, trade expenses includes rupees 300 being penalty paid to customer authorities. So, trade expenses of rupees 300 being bracket, in bracket you can write it as books to Sridhar sons. You can write like this. For trade expenses, you can write this as penalty paid to customs authorities. Penalty paid to customs authorities. Amount of 300. Next is sales tax, correct? Okay, sales tax is allowable expenses. And next, after sales tax, there is a bad debts reserve. See, any reserves or provisions, it is not allowed. Bad debts reserve. Bad debts reserve, it is 2,400. Bad debts reserve, it is 2,400. Next, bad debts written off, it is allowable expenses. Next, telephone expenses 300 is also allowable expenses. Interest on capital 3,000. Interest on capital, since it is the amount which is invested by the owner and he is himself taking the interest, is not allowed as per income tax. So interest on capital is not allowed. Interest on capital. What is the amount of interest on capital? It is 3,000. Next, interest on loan. Interest on loan. What is the amount of interest? Interest on loan is allowable expenses. Okay. Next, donations, correct? So the donation, it is allowable under section, allowable as deduction. You can write in the bracket, allowable as deduction under section 80G. When calculating the total taxable income, dear students, I am repeating, while calculating the total taxable income, we have to give this amount of deduction under section 80G as donations. Okay, if it is allowable donations, we will allow this to the extent of 200. Hence, it is disallowed here. Hence, it is inadmissible expenses, not allowed here. Next, after donation, the next is repair to furniture. Repairs to furniture. Repairs to furniture. This amount of expenditure incurred for repairing the furniture is a capital expenditure. In bracket, you can write it as being capital expenditure, it is disallowed. Being capital expenses. All capital expenditures are not allowed. What is the amount? 350. Is it allowed if I write in the down? Is it visible if I write in the down? So, repairs to furniture, it is 350 rupees being capital expenditure. Next is legal expenses. Legal expenses, for that there is an adjustment, that is legal expenses are incurred for purchase of land. So I will take it here since if I write here in the right side, you can wave it, correct? I take one more column. Okay. Next amount is legal expenses. For legal expenses, the legal expenses are incurred for purchase of land. So for purchase of land, this legal expenses are incurred. So legal expenses, entire amount of legal expenses being capital expenditure, it is disallowed. What is the amount of legal expenses? Look into the left side of the problem, 1,250, right? 1,250 rupees of legal expenses. It is inadmissible, so it is added back to the profit. Next is puja expenses. Of course, puja expenses is allowable. Next, depreciation. What I am doing here for depreciation, the entire amount of 3,900 is considered as inadmissible. In bracket, you can take this as adjusted later. In bracket, you can write down as adjusted later. Means the entire amount is considered as inadmissible, and whatever the admissible expenses given in an additional information, that will be deducted. It is as good as only the 900 rupees is adjusted. Because sometimes here what happens, 900 rupees, 3,900 and the 3,000 is a small amount. You can make out the difference of 900. It should be added or deducted. Sometimes what happens, there is a more amount of allowable expenditure, less amount of inadmissible expenses. In that situation, you may get confused whether we have to add it back or deduct it back. So what you have to do one thing, whatever the amount of depreciation which is debited to the profit and loss account, if it is not as per the income tax rule, then add it back, completely add it back. Any information relating to the depreciation is given, which should have to be deducted, then deduct it later. Okay, like that you have to do. Now you have to do one thing, take the total and tell me what is the amount which I have to take into the outer column. I don't have the solution for this. I have only the question with me. Just take the total and tell me how much. 6,100, 300, 6,400, 8,800, 11,800, 12,000, 12,350, 13,000, 13,600, 16,000, 17,500. Is it correct? 17,000, yes, very good. 17,500. What you have to do now? Add this to the amount of net profit. 25,000 plus 17,500. How much it is? 42,500. Correct? 42,000? Yes, 42,500. For which, what we have to do? You need to deduct. Answer. There are again some items to be considered. First one is what? Here we have taken inadmissible expenses debited to profit and loss account, correct? Inadmissible expenses debited to profit and loss account. What is the second item here? The second item here is B. Business income not credited to profit and loss account. Any business income which are not credited to profit and loss account, that should have to be added. Is there any business income not credited? Not credited means we have to look into the additional information, adjustment. So we'll just look into the adjustment. I'm just viewing the problem, 1 second. Okay, just look into the adjustment. Is there any information relating to the income? First one is trade expenses, it is not income. Stationery is also expenses, legal expenses also income, expenses, and depreciation also expenses. So there is no income information relating to this, so it is nil. Then third part is overvaluation of opening stock and undervaluation of closing stock. Is there any information relating to this? Overvaluation of opening stock and undervaluation of closing stock? No, right? So even there is no information. So whatever the balance which we got as 42,500, this is added item. And again, there is adjustments relating to the deductions. Now, take this as less. Less what we have to deduct here, as we know, for adding the while adding the item we have taken inadmissible expenses debited to profit and loss account. But now what item we have to take? Admissible expenses admissible expenses not debited to profit and loss account. What are all the admissible expenses which are not debited to profit and loss account must be taken. So not debited means you cannot see that in the profit and loss account. Means because it is not debited at all. So we have to look into the additional information. Just look into the additional information. We have 4 or 5 items. Here 4 items we have. One is trade expenses. Trade expenses, it is already been debited and we have made an adjustment here. Correct? This trade expenses here. We have already made an adjustment. And second one is stationery. For stationery also we have adjustment and it is debited to the profit and loss account. So we have adjusted. Legal expenses also we have adjusted here because it is debited to profit and loss account, being inadmissible, we have adjusted. And last one is depreciation. Depreciation allowable as per income tax rule. It is also debited, but what we have done, whatever the amount which we have debited, the entire 3,900 was added back. Now, the depreciation amount, allowable depreciation, the complete entire amount of allowable depreciation, that is depreciation allowable. Depreciation allowable. What is the amount of depreciation allowable? 3,000. Only 3,000. 3,000 is allowable expenditure which should have to be deducted. Next, this is the first point under deduction item. The second point under the deduction item is business income credited. I'll take because it is the space is limited. I'll take into the left column. I'm removing the left items because we have adjusted and taken to the outer column. A item we have taken, that is admissible expenses not debited. There is only one admissible expenses, we have adjusted that. And item B, under deducted, we have to deduct this, correct? Item B, which is item B? Business income. Not business, it is non-business income. Non-business income credited to profit and loss account. Look into the credit side of the profit and loss account for this. Any business income which are credited to the profit and loss account. Any business income which are credited to the profit and loss account. So that we have to deduct it. So look into the credit side of the problem. Look into the credit side of the problem. First one is, credit side of the profit and loss account. First one is gross profit. Gross profit is 72,000, correct? Second one is interest on government securities. So this interest on government securities, is it an allowable expenses? Income. Is it a business income? Definitely not. This is taxable under the head other sources. So since it is a non-business income, we have to take this. Which is that item? Interest on government securities. Interest on government security. What is the amount? 4,150. 4,150. There is one item of 3,000 we need to adjust. Now 4,150. Next item is capital gain. That is short-term capital gain. This is taxable under the head capital gain. Correct? So short-term capital gain. What is the amount of short-term capital gain? It is how much? 2,500. 2,500 is short-term capital gain. Next item is bad debts recovered. See, look at here. They have given bad debts recovered in bracket. They mentioned it is previously allowed. Previously allowed means we can even allow it as an income. When earlier it was allowed as an expenditure, now we can consider this as an income. So ignore it because it is a business income. Earlier it was allowed. Now sundry receipts. Next is sundry receipts. Sundry receipts. It is also a business income since no additional information relating to it, whether there is any other kind of receipts have been added to as sundry receipts. So we can take this as a non-business income of two items: interest on government securities and other one is interest on capital gain. Next, third item is undervaluation of C is undervaluation of opening stock and overvaluation of closing stock we have to take. So there is no adjustment. It is relating to the undervaluation of opening stock and the overvaluation of the closing stock. So we have taken this as nil. Now take this three items to the outer column. The total of these three items: 3,000 plus 4,150 plus 2,500. How much it is? 7,000. 3, 4, 7, 8, 9,650. 9,650. This 9,650 we have to deduct. Yes, we have to deduct this amount of 3,000, 4,150 and 2,500. That is put together total of 4,650. We need to deduct it from 42,500. Can you tell me what is 42,500 minus 9,650 is how much? 32,850. Okay. 32,850. Is it correct? Others also check and tell me whether it is correct. This is called as what? Taxable income from business. What is the amount of taxable income from business? Amount of taxable income from business is 32,850. Finished? Everyone got this? Anyone has a doubt in this? You want me to explain in any of the item? Or else if you are understood so that I can continue further. Finished everyone? Finished? Yes, okay. Now, we'll continue further, this problem is not ended up to this, because look into the problem. What was the first sentence of the problem? From the following profit and loss account of measures Sridhar Limited, compute his total income. What they've asked us to do? They've asked us to calculate his total income. How to arrive for the total income? Put together of all four heads of income, that is taxable income from house property, then taxable income from business, taxable capital gain, then taxable income from other sources. Put together of all these four, you will get gross total income. And if you give any deductions under section 80IA to 80U, the balance what you get is called as total income. Correct? Yes. So now we have to arrive for this total income. Now we have calculated taxable income from business because we had an adjustment for this. We have calculated. Now what we have to do? We have to work out here. Okay. We have to calculate taxable income from total taxable income. Shall I erase even this? For this same problem, we have to calculate taxable or you can say total taxable. We have to calculate total taxable income. So for which, what we have to write in the beginning, you should have to write in the beginning as computation or calculation, another same, computation of total taxable income. So the format for this is, first we have to write assessee. If you write all this format neatly, then you can score a very good marks. Who is an assessee here? Assessee is Measures Sridhar Limited. Measures Sridhar Limited. Residential status is resident. Right side, assessment year, it is 2023-24 and previous year, it is 2022-23. 2022-23 particulars, amount in rupees, amount in rupees. This is the format compulsorily you have to write for all. Okay. First which item we have to take? That is taxable income from house property. First one is taxable income from house property. Is there any information relating to the taxable income from house property? They have not given any information. So what we can do? You can take it as nil. Second one is taxable income from business. What is the amount of taxable income from business? I have erased. Okay, it is there in your message. 32,850, correct? 32,850. Is it correct? Taxable income from business. And third one is taxable capital gain. and there is only one information relating to the taxable capital gain. Just look into the credit side of the profit and loss account, which we have considered under business under the head business as non-business income. One item is there. Which is that item? Can anyone tell me? Relating to the capital gain. They have given capital gain in bracket, it is short term, correct? What is the amount? Capital gain in bracket short term, it is 2,500. In the sense, it is taxable short term capital gain. Taxable short term capital gain, it is 2,500. 2,500. Next, fourth one is taxable income from other sources. Taxable income from other sources. What are the taxable income from other sources? In credit side of the profit and loss account, there is one item, that is interest on government securities. This interest on government securities are not considered under the head house property nor under the head business, because we have considered there as non-business income. Receiving interest from the government security or investing on the government security is not operational activity of the business, correct? Next is taxable short-term capital gain. This interest on short-term capital gain is also not considered under the head capital gain. Then it will be taxable under the head income from other sources. What is that amount? Interest on government securities. Interest on government securities. What is the amount of interest on government securities? 4,150. Just look into this. Any other items are there? No other items, correct? I'll take this amount of 4,150 to the outer column. 4,150. So all the four heads of income we have taken, that is taxable income from house property, taxable income from business, taxable short-term capital gain, and taxable income from other sources. We have taken all the four heads of income. Now just take the total and tell me what is the amount. That total is called as gross total income. Gross total income. Can anyone tell me what is the amount of gross total income? 39,500. Okay. 39,500. For this, we have to give some deductions. So less deductions under section. There is one deduction. Can anyone identify and tell me what is the deduction we need to allow here in this problem? While explaining the problem, I said about there is one deduction which can be allowed later. Anyone? Fast. I'm waiting for you. Deduction under section which one? No one is responding. Okay. There is one deduction under section 80G, that is donations. Correct? You got it? Yes, very good. Somebody said, Uma. Very good. Donations. What is the amount of donations? What is the amount? Donations. Where is it? Debit side. Just look into the debit side of the problem. There is item called donations. Okay. Donations, it is 200 rupees, correct? So take this 200. No other deductions. There is no other deductions, like they have not given any information relating to the deductions. We'll take that to the outer column, 200 rupees. And whatever the balance which we got after deducting, giving deduction under section 80G, that is called as total. Is it visible? Make the screen a little dark. Total taxable income. Total taxable income. What is the total taxable income? It is 39,300. 39,300 is the total taxable income. Got it? Everyone understood? 39,300 is the total taxable income. So like this, we have to calculate, and on this, we also have to calculate the tax liability. But for this problem, they have asked us to calculate total taxable income. Okay, I think you have understood this problem. Let us move to another problem. I'll just share the screen for working out of next problem. This is the second problem. Everyone finished? We'll quickly move to the second problem. Okay. So I'll just, because of a shortage of time, it's already 11:40. I'll just analyze it, and after analyzing it, I will give this to your assignment. Okay. I will just going to analyze. You have to work out from your side and come back for the next class. Understood? So now I'm explaining what are all the admissible, inadmissible, what are the business income, what are the non-business income, if there is any adjustment relating to that of opening stock and the closing stock. In detail, I will explain. You take the screenshot of this problem and also mark it down in your notebook and work out so that you can understand easily. This is a very important one in business taxation, the main thing. Okay. So here also they have asked us to calculate business income. I'm sorry, total taxable income. Okay, look into this problem. Following is a profit and loss account of Measures Facts Limited for the year ending 31st March 2023. They have given this information. First one is 2 salaries, 48,000. Interest on capital, 6,000. Interest on bank loan, it is 5,000. Advertisement, it is 14,000. Repairs of car, it is 14,000. Fire insurance, 2,000. Premium, 28,000. Car expenses, it is 2,000. General expenses, 8,000. Office expenses, I'm sorry, it is fire insurance. One second, wait. Okay, fire insurance premium is 2,000. Car expenses, it is 28,000. General expenses, 20,000. Office expenses, now take the screenshot, okay. Office expenses, 8,000. Extension to building, it is extension to building capital expenditure, 5,000. They are given in bracket directly that it is a capital expenditure. So you need not to break your head. Next, depreciation of the car, it is 12,000. Net profit, it is 1,73,000. Right side, they are given by gross profit, 2,60,000. Then rent from house property. There is again some. Okay, rent from house property, it is 36,000. Gift from father, 16,000. Commission, 6,000. Discount, 3,000. Sundry trade expenses, 7,000. Sale of car, it is 44,000. Then income tax refund, it is 8,000. Okay. These are all the information relating to the profit and loss account they have given. Let us look into one by one and analyze it. Analyze it. No, this is not there in your study material because I am doing this problem from some other textbooks. So this you can work out, and also the solved problem, whatever is there in your study material, can also be worked out. Okay, you can look into the study material and also work out some problems in the study material which is given. This is unsolved problem which is given for you for your assignments. Okay. First one, it is salary. Since it is an allowable expenses, we can ignore this. Next is interest on capital. Interest on capital is, it is inadmissible expenses, correct? If it is an inadmissible expenses debited to profit and loss account, what we have to do? We have to add it back as a first item. Inadmissible expenses debited to profit and loss account, we need to add it back. Okay. Next, shall I work out this problem or will you do it from your end? Fast. Reply fast. Shall I work out from your end? Will you work out from your end? Or shall I do it? You will do it. Very good. I like this enthusiasm. So you must have to work out from your end so that you can understand. Next, interest on capital, it is 6,000. There are still more problems to do it. I will also work out still some problems, 1 or 2 problems I will do it. But you have to do it from your end. I will explain in detail to you. Okay. You try it from your end. Interest on capital, it is inadmissible. As you know, it is an inadmissible expenses. What we have to do, we have to add it back. Whatever I am analyzing, you just take a complete note and do it from your end. Interest on capital must, being an inadmissible expenses, we have to add it back. Next is interest on bank loan. So bank loan they have taken for running the business, so it is an admissible expenses. Next, advertisement. If there is no information or additional information in relating to this, this is also allowable. Repairs of car. Car is a fixed asset, correct? If there is any repair or any expenditure relating to the car in the sense for purchase of car or sale of car income, next repair of car, everything is a capital expenditure. So that capital expenditure incurred for the repair of car is inadmissible expenses. You have to take that as inadmissible expenses debited to profit and loss account, must be added to the net profit. Okay. Fire insurance premium 2,000. Fire insurance premium, it is a business regular expenditure as usual. Next, car expenses. See, any expenditure for the car, okay, expenses in the sense it may be a traveling expenses. This traveling expenses, whatever the driver charges or the petrol charges etc. incurred for car, for using the car, that is allowable. But repair of car, purchase of car being a capital expenditure, but car expenses is a revenue expenditure. You should understand this clearly. Car expenses is allowable expenses. Next, general expenses. If no information relating to this in additional information, there is one additional information look into here. Third point is that let us look into that later, but there is an adjustment. After looking into that, we can consider this as admissible or inadmissible. Next is office expenses. So office expenses, it is, of course, it is a regular expenses, 8,000, it is allowable expenses. Next, extension to building. Extension to building means they are actually going for extending their business. That is again construction of building. So this is not the regular activity of the business, but for the construction industry, it may be allowed. But this is a business where it may be a trading business. So for this extension of building is not considered as an expenditure. This is a capital expenditure. Being capital expenditure, it will be shown in the balance sheet, correct? It is not allowed. So being inadmissible expenses, we need to add it back. How much is the amount? 50,000. Next, depreciation of the car. See here, they have given car amount of depreciation of the car. If it is an allowable expenditure, of course you can take it. But if it is not allowable expenditure, then we have to add this entire amount as an inadmissible expenses. In bracket, you can write that as adjusted later. Then in the admissible expenses, whatever the depreciation amount or the percentage which is given, that can be adjusted later. Net profit is given. Then look into the right side of the profit and loss account. Any doubt in the debit side? Repair and maintenance is allowed. Repair and maintenance on the capital asset is not allowed. But any repair and maintenance on like building, etc. is also not allowed. But any repair and maintenance for the machinery is allowed. Okay, understood? If the car is in the name of the business, whether the car is in the name of the business or building is in the name of the business or anything, but it is not allowed. The expenditure, the repair amount is not allowed because it is a fixed asset. But any expenditure like traveling expenses, the petrol or any expenses from to the place for running the car can be allowed. Okay, but whether the car is in the name of the business or not, that we taken into consideration for calculating the depreciation, but not for allowing the depreciation. Whether you take the car as in the rent or not, capital expenditure always allowed only when, I mean, allowed in the sense, for the purpose of accounting, this car expenditure, any car expenditure, not for the income tax. For the purpose of accounting, the car expenditure allowed only when the car is in the name of the business. Though car is in the name of the business, any amount of capital expenditure incurred, that will not be taken into consideration. Not allowed. Okay. Depreciation. Okay. For depreciation, look at here. Whatever the depreciation which is given in the problem, I mean in the profit and loss account, you straight away just do one thing. You add it back in case if it is not allowable one. Business depreciation amount profit and loss account ಅಲ್ಲಿ ಏನು ಕೊಟ್ಟಿರ್ತಾರೆ ಅದು ಅಲೋಯಬಲ್ ಎಕ್ಸ್ಪೆಂಡಿಚರ್ ಆಗಿರಲಿಲ್ಲ, ಅಡಿಷನಲ್ ಇನ್ಫಾರ್ಮೇಶನ್ ಅಲ್ಲಿ ಡಿಪ್ರಿಸಿಯೇಷನ್ ಬಗ್ಗೆ ಏನಾದ್ರು ಕೊಟ್ಟಿದ್ದಾರೆ ಅಂತಂದ್ರೆ ಈ ಡಿಪ್ರಿಸಿಯೇಷನ್ ಅಮೌಂಟ್ ವಾಟ್ ಎವರ್ ಇಟ್ ಇಸ್ ಗಿವನ್ ಇನ್ ದ ಪ್ರಾಫಿಟ್ ಅಂಡ್ ಲಾಸ್ ಅಕೌಂಟ್, ಯು ಸ್ಟ್ರೇಟ್ ಅವೇ ಆಡ್ ಇಟ್ ಬ್ಯಾಕ್ ಆಸ್ ಇನ್ಅಡ್ಮಿಸಿಬಲ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್. ಲೇಟರ್ ಅಮೌಂಟ್ ಆಫ್ ಡಿಪ್ರಿಸಿಯೇಷನ್ ಅಡಿಷನಲ್ ಇನ್ಫಾರ್ಮೇಶನ್ ಅಲ್ಲಿ ನಿಮ್ಗೆ ಏನ್ ಕೊಡ್ತಾರೆ ಅದನ್ನ ಕಂಪ್ಲೀಟ್ ಆಗಿ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಿ ಅಥವಾ ಅಮೌಂಟ್ ಡೈರೆಕ್ಟ್ ಆಗಿ ಕೊಟ್ಟಿದ್ದಾರೆ ಅಂದ್ರೆ ಅದನ್ನ ಡಿಡಕ್ಟ್ ಮಾಡಿ. Okay, depreciation given in the profit and loss account, you add it back if it is not allowable one. ಎಕ್ಸಾಕ್ಟ್ ಆಗಿ ಅಷ್ಟೇ ಅಲೋ ಮಾಡಂಗಿಲ್ಲ, ಜಾಸ್ತಿ ಆಗಿರ್ಬೋದು ಕಡಿಮೆ ಆಗಿರ್ಬೋದು. ನೀವು ಕಂಪ್ಲೀಟ್ ಅಮೌಂಟ್ ಏನು ಅದು ಅಲೋಯಬಲ್ ಅಲ್ಲ ಅಂತ ಗೊತ್ತಾಗ್ತಿದ್ದಂಗೆ ಆಡ್ ಮಾಡ್ಬಿಡಿ. ದ ಬ್ಯಾಲೆನ್ಸ್ ರಿಮೈನಿಂಗ್, ಐ ಮೀನ್ in the adjustment whatever it is given, that should be deducted. Got it? Okay, now let us look into the credit side of the profit and loss account. In the credit side of the profit and loss account, they have given rent from house property 36,000. Rent from house property of 36,000. Is it business income? Definitely not. Correct? It is being non-business income. We have to deduct it back. Deduct because we have to deduct that amount from the net profit because it is been added. Got my point? House property income is not a business income, but it is added to the profit and loss account. Credited means what? It is added to the profit and loss account, but we have to deduct it. Next is gift from father. Is it a business income? Not at all, right? Where do you take this gift from father? Will you take under house property head? Will you take that in the what? Business, because gift from father is not a business. Is it capital gain? No. But this gift from father can be taken under income from other sources. That is also always gift received. Gift from father, what we have to do? Will you going to tax it? Other sources. If any amount of gift received from the father, will you take, see, for pocket money or the gift your father is going to give you, will you take that under the other sources? Is it the amount taxable? No, because it is not taxable under the head other sources. Any gift received from relatives or from parents is not taxable. Gift from parents or relatives, it is not taxable. And but it is a non-business income here. So non-business income, being non-business, being non-business income, we have to, one second. Got my point? Okay. So this income, gift from father is not taxable income. It is not at all taxable. In any other head, it is not taxable. Next, and being a non-business income, we must have to deduct here. Next, commission and discount, being a business incomes, we may allow it. It is a business income. Next, sundry trade receipt, it is a trade receipt. It can also be allowed as a business income. Next, sale of car. Car is a capital asset. I said it is a fixed asset. Fixed asset means it is a capital asset, being a sale of capital asset. This capital asset, whatever the amount of capital assets, the sale of the capital assets is taxable under the head capital gain, hence it is not allowed here. So being a non-business income, you must have to deduct it. Okay, next, income tax refund. As I said, when we are not allowing income tax payment as an expenditure, then there will be no, when income is not allowed under the payment of expenditure income, then expenditure, then income tax refund is also not allowable. Income tax refund also is not allowable. Wait for a minute. The income is also not allowable. In 1 minute. Very sorry, 1 minute. Okay, so this income tax refund, whatever the amount of income tax refund of 8,000 is also not a business income. Is also not a business income. Understood? So being non-business income, it must be deducted. Somebody asked, gift received in the hands of individual is taxable, but in the hands of business, it is not taxable. See, actually, as per Income Tax Act, any amount of gift received from the relatives, say for example, on the occasion of marriage or something, if there is any amount of gift received from the parents or from the spouse or from the children or from the like called as specific relatives, it is exempt from the tax. Okay, it is not at all taxable even in the hands of an individual. So only in order to avoid the tax, whatever the property, any property or the cash gift, cash amount, which will be transferred from this parents to the daughter or son, will be taken as a gift deed from the parents, gift deed from the, I mean, from the relatives, like that they will be taken, so that any kind of the property which is gifted, that is there is no limit. But in case of any amount of cash gift, any amount of cash gift received from the father or from anybody, but up to the extent of rupees 50,000 it is allowed. But in excess of the amount of 50,000, any amount of gift received from anybody, this is not allowable either in the hands of in the hands of business or anything. Okay, whether it is in the hands of business, any amount of gift received, that is also. But in terms of cash gift, I'm telling, cash gift received, but in any form, any gift received, it is allowed. Cash gift received up to 50,000 is not allowed. Now, understood? Now, okay, look into the problem. So now we have come across with the credit side of the account, correct? Now we'll quickly move to the additional information. You may have even other in other classes. So I'll just analyze this additional information. The company bought a car during the year for rupees 60,000. The company charges 15% depreciation on the value of the car. The car was sold during the year for rupees 44,000. The use of car was 3/4 for business and 1/4 for the personal use. I'll just show you the adjustment here. Let's look at the table. You have taken a screenshot of it, right? I'll show you the table. Board. I'm removing this problem and showing in the board. See here, they said a company bought a car for rupees how much? Company bought a car for rupees 60,000 and it allowed 15% of depreciation on the value of the car. They said on the value of the car 60% means it is a fixed rate of depreciation. Every year they are going to charge 15% of, they said on the value of the car directly. So usually for the income tax purpose we will consider reducing balance method, but they have not given any information relating to the year of purchase. Correct. So, for the purpose of calculating now, whatever the information is given in the problem, what we do, we calculate 15% of depreciation on this value. 15% of 60,000 is how much? It is 9,000. Is it correct? It's 9,000, correct? 15% of depreciation is 9,000. This amount of depreciation, whatever we are calculated, must be adjusted. But further, there is one information. Just look into it. The car was sold during the year. Sales. The car was sold during the year for rupees 44,000. Car was sold during the year for rupees how much? 44,000. Then the use of car was 3/4 of the business. So this 44,000 is already given in the credit side of the profit and loss account. Look at the credit side, sale of car. Yes, sale of car of 44,000 is given, correct? So this amount is already given, and being a non-business income, we will deduct it from the business. Next, the use of car is 3/4 of business and 1/4 for personal use. So whatever you are charging now as a car expenses or as a depreciation, you have to take this amount of depreciation only to the extent of 3/4. Means depreciation allowable is how much? Depreciation allowable is 60,000 rupees of value of the asset multiplied by 15% of depreciation multiplied by 3/4. Only 3/4 expenditure is allowed, but not completely allowed, because 1/4 is used for personal purpose. Out of 9,000, only 3,000 is allowed. Got my point? So this amount will be taken as admissible expenses as per Income Tax Act, and it will be deducted. Since there is an adjustment for car saying 3/4 of the car is used for business, there is one item called car expenses of 28,000. How much? Car expenses of 28,000 rupees also must be taken to the extent of 3/4 only. Only to the extent of how much? 3/4 only. So 28,000 and 3/4 is allowed. How much is not allowed? 1/4 is not allowed. So this is inadmissible expenses. Inadmissible expenses, which is debited to profit and loss account, must be added back. And this is allowable expenses not debited must be deducted. Got it? Everyone understood? Is there any other doubt again for this? Any other doubt for this? Okay, next. Yes, the sale of asset is a capital gain. Why they have given car purchase value? Because look at here, car was purchased for rupees 60,000. For capital gain, we need to calculate. How to calculate the capital gain? For calculation of capital gain, we have to take the sale consideration. Sale consideration is 44,000, and we need to deduct any transfer expenses or the sale expenses. There is no transfer expenses here, so the net sale consideration is 44,000, and deduct. They have not specified whether it is a short term or long term. But since there is no information about inflation index, we can take this as a short term. The asset was kept in the year for a short period. So in that situation, in that case only, we have calculated the depreciation at 15% on the cost value, on the asset value only. So now deduct cost of acquisition. What is the amount of cost of acquisition? Acquisition is the purchase cost, correct? So cost of purchase is how much? 60,000. What is the balance? Is it the positive value? Are you getting the positive value? You are getting the negative value, correct? Negative value means What is that? This is short-term capital loss. Short-term capital loss. What is the amount of short-term capital loss? 60,000 minus 44,000 is 26,000. This 26,000 is a short-term capital loss. It is not income. 16,000. 16 is it? Yes. It's not 26. It is 16. 16,000 is a short-term capital loss. We have to be taken into consideration. Got it? This is about the capital gain relating to the car. Next information relating to the salary it is given. Salary includes rupees 500 per month paid to the driver of the car for 10 months. See here, driver's salary is allowable expenditure. Driver salary is allowable expenditure. What is the amount of driver salary? 500 per month for 10 months. That is 5,000 rupees is the driver salary. But there is adjustment you have to make here. Driver of the car, correct? Car is used for business only to the extent of how much? 3/4. Then even driver is also being considered only for the extent of 3/4 as a business expenses. Then remaining 1/4 is allowed, whatever it deducted as a salary and debited to the profit and loss account. Already profit and loss account ke driver salary ಏನಿದೆ ಅದು salary ನಲ್ಲಿ include ಆಗಿ deduct ಮಾಡಿಬಿಟ್ಟಿದ್ದಾರೆ. But only 3/4 ಮಾತ್ರ allow ಮಾಡ್ತೀವಿ. Remaining 1/4 is not allowed. So this 1/4 ನಾವೇನು allow ಮಾಡಲ್ಲ ಅದನ್ನ whatever you just calculate and look into it. So this is considered as inadmissible expenses. Inadmissible expenses, and this inadmissible expenses must be added back. Okay, next, last adjustment. General expenses includes rupees 2,000 towards domestic expenditure. Of course, domestic expenditure means it is inallowable, not allowable, inadmissible expenses. This 2,000 being a general expenses for used for domestic expenditure will be considered as inadmissible, and you need to add it back. You need to add it back. Okay. So then further they said compute income of measures facts limited from the business for the assessment year 2023-24. So okay, now you understood completely that how to calculate taxable income from business. But one thing you need to understand here, in order to calculate the taxable income from business, we have to take admissible expenses, inadmissible expenses, business income, non-business income, and opening and closing stock. There is no adjustment relating to the opening and closing stock. You can take that as a nil and you can calculate taxable income from business. But they have asked us to calculate total taxable income, correct? This total taxable income can be calculated. How? How we can calculate the total taxable income? By taking house property income, capital gain, business income, and other sources, correct? Now you know the business income, you know even the capital gain. You also know about the capital gain for the calculation. You know about the capital gain for the calculation, correct? Why it is not? Okay. So this amount of capital gain calculation, whatever I have shown here, you can take that as a loss. Capital gain, short-term capital loss of 16,000 can be adjusted, but that is a set off and carry forward. That I will discuss it later. Then you also must have to calculate the house property income. So here we must have to know the information relating to the rent from house property is given. Rent from house property means whatever the rent they are receiving from the house property, the 36,000 amount is given. But this 36th amount of rent from house property, maybe actually the amount of rent actually received from the tenant, but we have the format, that is municipal value, fair rental value, comparing with the standard rent and also comparing with the actual rent. Whichever is higher will be taken as a gross total income, correct? So any information is not given, then this rent will be taken as a gross total income. What is the gross total income now? Gross total income is 36,000. Then municipal tax paid information is also not given. So this amount will be the same as net annual value. And this net annual value, for this we have to give a standard deduction. How to give a standard deduction? See, net annual value of 36,000 NAV of 36,000 is given. So for this we have to give a standard deduction. What is the standard deduction? The standard deduction is 30% of the NAV. 30% of NAV. What is the 30% of NAV on 36,000? 10,800. Is it correct? You just deduct it. And one more item, interest on borrowed capital. There is no amount relating to the interest on borrowed capital. So only this amount we have to pay, and the balance what we get, this is the taxable income from house property. This is a taxable income from house property. This amount we can take as a taxable income from house property. Just take, first you calculate the taxable income from business, then you calculate house property income, then you calculate taxable capital gain and also other sources, then go for this. Then go for calculation of total taxable income. You just do it from your end. Let me check whether how you have understood. I think whatever the problem which have been analyzed is understood something. You again, if you want, you can just refer this link. I mean, click on the link and refer again the class so that you can understand. Okay. Now I'm going to wind up the class. Still, since already some of the classes of HRM, I think it has been running. You can join for that class. By next class, we'll move into the next problem. Okay, or the next method. Thank you. See you all.